Fed Chair Jerome Powell kicking off his two-day congressional testimony today. Powell making it clear that interest rates will go higher for longer as economic data indicates a still strong economy.
The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
While the Fed has previously mentioned that there was still a long way to go to reach the central bank's desired 2% inflation goal, Powell did say that he is starting to see some signs of disinflation.
There's little sign of disinflation thus far in the category of core services excluding housing, a category that accounts for more than half of core consumer expenditures. To restore price stability, we'll need to see lower inflation in this sector, and there will very likely be some softening in the labor market conditions.
Now, things certainly did heat up. Senator Elizabeth Warren put Powell on blast, asking him to respond to the millions of Americans that could lose their jobs from these interest rate hikes.
If you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down.
Now, that was interesting, and she went on, Elizabeth Warren, to say, Shauna, that you are gambling with people's lives, and if you can't fight for the American people, there's only one solution. That's for us to find someone who will, at least insinuating that they need a new Fed chair. That is clearly not the job of the U.S. Senate. I'm fairly certain Elizabeth Warren knows that, but that's a whole nother issue. What was also fascinating is who agreed with her. Arguably her polar opposite in the Senate, Senator John Kennedy from Louisiana, with a similar line of questioning to Powell. Listen.
When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
I
know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels, like, for example, just job openings.
Okay, so, Shauna, are they playing politics here, trying to get Jerome Powell to say, yes, I need 2 million Americans to lose their jobs in order to bring inflation down to 2%? Or is there a bit of a fundamental misunderstanding of how this process ought to work?
I think it's a combination of both, actually. I think they are playing the blame game. They want to place the blame on somebody if, in fact, we do see job losses. On the flip side, though, we've heard time and time again, even on this program a number of times, that we don't necessarily need to see a massive job loss here in the U.S. in order to get inflation under control. We can steadily add jobs, not at the rate, clearly, that we have been adding them over the last 3 months. We've added just about 1 million jobs here to the U.S. economy, really putting that job accretion in perspective here, but we don't have to see massive losses. Mark Zandi, Moody's analytics chief economist, was on with us last week saying he doesn't think we need to see massive pain in the job market in order to get inflation under control. I think right now the market's just reacting to that hawkish rhetoric that we have heard from Powell, similar to what we have heard in the past, but really doubling down, saying that more rate hikes are likely on the table. We could be in that environment, that higher rate environment, for longer than maybe the market wanted to anticipate, wanted to think, leading into the testimony today. But we're going to get more tomorrow. And I think this is just reconfirming, or really confirming, everything that we have heard from Fed Chair Jay Powell at his last couple of conferences.
It's important testimony, not to lessen the impact. It will be tomorrow in the House. But what matters? Jobs number Friday, CPI Tuesday, PPI Wednesday, and that's what Powell is watching. Has been data dependent from the start.